Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
All right, let's talk about psychology. I don't know if I've ever spent any time here on the webinars in the past. I don't remember, but I'm putting up a slide about psychology because I truly believe that your psychology, understanding yourself, doing an analysis about yourself, knowing the kind of pitfalls that you have, becoming your own coach, if you will. In other words, you're having an issue. You're cutting a trade short. You're not letting a winner run. You're letting a loser run instead of letting a winner run. That's some kind of a personality flaw that you need to work on. And the thing about the people that become successful in anything is they have a passion for what they're doing, and then if they make a mistake, they don't go into a corner and cry or blame somebody else for the mistake. They go and they figure out what exactly they're doing wrong, and they try to repair that. They realize that something is preventing them from becoming a good trader or a better trader, and so they try to work on that. And so if you have a personality to where you think you are a perfectionist, no trade you ever take is right. You're probably going to have a hard time pushing the buttons. You're probably going to have a hard time getting in or out of a position. If you're somebody who goes into a trade with the idea that you're just going to win at all costs, you're probably going to end up treating trading like a gambler. And if you do that, you're going to have large wins, but all you need is that one large loss, and you have no more trading capital, and you can't stay in the game. Okay. One of the questions that I always hear is should a trader really try to control their emotions? Is it really possible when you're trading to control your emotions, or should you try to channel your emotions to help you focus and become more competitive when you trade? So that's something to think about too. We all need to have some kind of competition, some kind of drive, some kind of ego when we trade. We just need to understand that if we have a personality that's not leaning towards controlling their emotions, maybe we need to start to focus those emotions to make them actually work for us instead of against us. This is what people say when they say you're trading in the zone. And this quote here from Dr. Steenbarger, who happens to be a local person around where I live. Successful traders really want to trade. They have a passion for trading. Addictive traders need to trade. They have a passion for action and excitement. He has a website, and if you're ever interested in getting some more information on psychology, he has several websites. Just Google his name, and it'll take you to a couple of his websites. He has a blog, and on that blog, he has some great articles on just going through the steps of becoming your own trading coach. All right, we're going to talk about some old sayings in the market, okay, because I'm old and I like old sayings. One of my favorite old sayings before I really go on here is never confuse brains for a bull market. I'll never forget when I learned that lesson, and it took a long time to really learn that lesson, okay, and that's helped me a lot. Believe it or not, that's how I understand the greed cycle of a stock market. That's how I understand and how I can control my greed. It's just I understand that probably prices are moving up because I did a good job analyzing and I'm trading with the trend. All right? So markets can only go up, down, or sideways. And during these periods of vertical movement, we have one force which is stronger than the other force. Obviously, buyers are stronger than sellers in uptrends. Sellers overwhelm buyers in downtrends. But markets will continue to move vertically until prices are reached where there's enough opposing orders to slow down or shut off the buying or the selling. So in an uptrend, prices will continue to move higher and higher until they reach a large enough sack of orders and large enough willing sellers in an uptrend to actually slow down the uptrend and sometimes actually force a period of sideways trading, which is what we want to try to take advantage of. Okay. All right. As with any saying about the market, the conditions for the phases of the market have root causes. And what I mean by that is this current stock market rally, which I'm pretty sure most everybody that's here with me today is a little bit impressed by or a little bit stunned. I know there's professional traders out there that manage money for a living that missed most of it, just couldn't believe it was happening, completely stunned. The current stock market rally is very much liquidity driven due to the near zero interest rates, which of course affect the U.S. dollar, which is what we trade. And so the U.S. stock market is up, and at the same time, we've seen the U.S. dollar just collapse. Okay? So that means that if the dollar is trending lower and the stock market's trending higher, the dollar is making a series of lower highs and lower lows, which is what a downtrend is, while the U.S. equity markets mostly have been making higher lows and higher highs ever since March. But there's different types of trends, and really, this is how you decide which type of trader you want to be. The primary trend, which we always talk about being influenced by the business cycle or the economic cycle, can last for long periods of time. Not always. I mean, there's no numbers on any of these trends. Things could come along that could disrupt them. Last year exactly was one of those periods of time where we had starts and stops, and we had institutions blowing up every other week, and the Federal Reserve meeting on the weekends to decide who was going to buy who. And so there's always going to be circumstances that are going to change these cycles. And so you could see this trend best if you're observing it on a weekly or a monthly chart. It's going to take a long, long time to play out. A weekly candle, of course, it's only going to be one candle made up of 5 trading days. So it's not going to do very, very much except trade on that one period. And it's much easier to see these cycles on those higher time frame charts. But people like to take advantage of what we call the intermediate term trend, which is a counter trend profit-taking move, which can last, usually visible on daily charts, 240 charts, which are 4-hour charts, maybe 60-minute charts, and they can last for some days, maybe a few weeks. How many people remember back in July when we had a few weeks in a row where prices were falling right before the release of the earnings from the June quarter, and all of a sudden everybody was talking about how the charts were looking like head and shoulders, and there was in the equities markets, and then all of a sudden when the earnings reports started to be released, prices just exploded higher. Okay, so you can see these profit-taking reversals, but that only ended up being retracement in a longer-term uptrend. A lot of times the Forex traders, the futures traders, equity traders, you wait every day, and with 24-hour markets, you get so many chances to do this. You can get economic data reports coming out from all over the world. You can attempt to trade those little short-term movements on small time frame charts. And people try to do this all during the day, and that is a complete trading style in its own. Each one of these is a trading style in its own. The short-term trader is more of an intraday type of trader, just trying to take advantage of small moves. The intermediate-term trader is what we like to call a swing trader, somebody that actually likes to trade the up and the down swings in the market. And a primary trader, a primary trend trader, is probably going to be a position trader. So it's important to understand that these different styles will really affect your trading style, and you got to come to grips with which one of them actually fits your personality the best.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.